Good evening, everybody, and welcome to Metropole TV, the first 24-hour business news channel here in Kenya and East Africa. This is The Smart Investor, and I'm your host, Ali Khan Sachu, and it's a pleasure to be with you here at the end of what's been a quite tumultuous week in the markets, and we'll talk through what's been going on. But let's start with Kenya and China. President Uhuru Kenyatta is in China for the Belt and Road Summit. This visit has been planned. Lots of other African leaders are there as well, Prime Minister Abiy of Ethiopia. But everybody's been looking to see whether China would finance the extension of the railway from Naivasha to Kisumu. This is why President Kenyatta went with his handshake wingman, that's Raila Odinga, together to present a united request to the Chinese government. The Chinese government, since the Venezuela situation, have been worried about the risk of a subsequent government coming in and rejecting loans which were taken by a previous government. This is Xi Jinping mentioned this last year in FOCAC, and that's why you've got the two of them going together to say, yes, this is what we need, this is what we want. We're going to talk about that visit in the second half of the program with Noreen. I look forward to doing that, and we can then dig more deeply into what has come out of that visit. Kenya is to issue a new Eurobond to refinance the maturing bond. We've been speaking about this for a few days, but today Reuters were reporting on the matter. Of course, we made our debut. We were a debutante in the Eurobond markets in 2014. We issued a 5-year bond and a 10-year bond. We then came and issued more bonds later, but it's that 5-year bond which has come up for maturity. And what the Treasury Secretary is saying is that we're going to borrow in order to pay back that bond. There's been a lot of debate about whether that is appropriate, is to re-borrow and refinance existing borrowings. But essentially, that is a normal practice in the financial markets. There's nothing sinister in that. So therefore, let's keep an eye on how much the government requests. I suspect it's going to be in the area of about $2 billion. But let me give you some more detail around this Reuters report. Rotich told reporters after giving a speech at an event in the capital, "You can't give details about quantum. My bet is 2 billion. I would have said more about 4 weeks ago, but the markets have moved against us in the last 4 weeks. But we are certainly prepared," he said. The Eurobond, we want to refinance the maturing debt, which is the 5-year we took in 2014. We spoke about that already. Look, there's a lot of debate about putting back that insurance facility we had with the IMF. Do you remember it lapsed? We had it for, I think, over 3 years. Whatever we're paying the IMF, we're going to get more back in return because bondholders will demand a lower interest rate. They'll accept a lower interest rate if the IMF is seen in the background as being a steady hand. So although there's been bravado talk, the central bank governor said, look, we don't really need it. Henry Rotich is saying the same kind of thing. That's just negotiation, isn't it? You don't go into a negotiation and roll over. You go in, with a reasonably robust position. But make no mistake, as far as I can see, and as far as the markets can see, it does need that support from the IMF. Otherwise, the bond will be quite expensive. The bond reaction, it dropped 1.2 cents yesterday. Worst day in more than a month and a half, and that's because of the extra supply that's coming, that everybody knows is coming, and that our Treasury Secretary is confirming is coming. So people bring the existing bond prices down in order to price the new bond more accurately. But also, it wasn't only just because of more supply, it was also because of very weak markets in emerging markets and in frontier markets, which we've been talking about over the last few days. I mean, it's been pretty dramatic, and I'll touch on that in a little while. The drop made the existing bonds the worst performers in sub-Saharan Africa, which was generally struggling after high-yield sovereigns such as Argentina had a terrible day on Wednesday, and I'll show you what happened in Argentina, because Argentina is also a cautionary tale of a country that borrowed too much, made poor investments, and could not repay the loans that it took out. And this is ultimately where things end up if we don't get things under control. So from a tactical perspective, I would have preferred the Treasury to have been issuing this bond 2-3 weeks ago when markets were incredibly benign and you could have issued just about anything at a really good price. We missed that window of opportunity. Markets have turned a little bit. Let's see how things develop, but make no mistake, they've got to go to the market. TPS Serena Hotels, which is an iconic hotel chain here in Kenya, Uganda, as far as Mozambique. I've stayed in one of the most beautiful hotels called La Polana in Maputo. And Serena, of course, being from Mombasa, my memories of the Serena Beach Hotel in Mombasa go back an eternity, and I still go back there, and there used to be an old table tennis table downstairs and a lovely swimming pool. But they reported full year results, revenue, and this is interesting because, you know, we've been talking about how strong tourism was last year. I believe we said we had 2 million tourists. I was speaking to the gentleman who's come to run Acor's business here in Kenya, and he said, Ali Khan, what's 2 million? France has 60 million a year, for example. But TPS Serena manages 15 hotels and resorts across East Africa under the Serena brand name. Revenues, they eked out a gain of 2.89%, which is quite good when you consider that their flagship Nairobi hotel was only at a 52% or 50% capacity utilization because they were doing the refurbishments. When you strip that out, therefore, the revenue gain doesn't look as anemic as it might do at first glance. The profits that they reported were flattered by a lower income tax charge. The income tax charge was just 64.44 million shillings this time versus 141.82 million last time. There were some capital allowances, they made some investments, but it's that differential which boosted the profits. So earnings per share actually was up 91.667%, which is a big increase, but a lot of that was attributable to the tax treatment that they received in this full year. What is a little bit worrying is cash and cash equivalents at the end of the year. That's how much money do they have in the bank account. You just take a date and say, show me the bank account, what's the balance? That's the cash and cash equivalents position. When you see it reducing or going negative, that's normally an early warning sign. And in this case, the cash and cash equivalents position was negative 180 million versus positive 611 million last time. So you can see the turnaround, but I suspect they spent it on some investments and will pull it back. Nothing too dramatic there, $1.5 million, which isn't much. But I must recommend TPS Serena because they give the most granular detail when they release their results, and they do that in good years and bad years, and they are really an outlier at the Nairobi Securities Exchange. In an age where information is very, very valuable, they provide investors a lot of detail around how their businesses are doing. In fact, you know, the level of detail that comes in that report probably puts them in the top percentile at the NSE, and they're competing with some big boys like Safaricom and KCB, as you can imagine. They talk of stabilization of Kenya's political environment in the second quarter 2018, post-handshake. They're saying market sentiment continues to indicate a consistent return of confidence in the tourism sector. They talk about having a diversified portfolio, which they do. I mean, if you look at, they have a safari circuit in Tanzania, here in Kenya, beach properties in Zanzibar, city hotels, which they're reinventing and rebranding. That started with Nairobi. So it's a really interesting business mix, but it's been struggling over the last few years to deliver the profits that shareholders were looking for, in part because of the problems we all know about. You know, you get one terrorist attack and the impact is much bigger You know, but fortunately, so far we seem to have managed the fallout from those sorts of incidents. Sri Lanka, of course, what a terrible tragedy has happened there. And they have a very, very important tourism sector. It'll be interesting to see how that responds. But terrorism hits tourism very, very quickly. That's a fact. Nairobi Serena, 46%. They were operating at 46% room inventory through this full year. But in the last quarter, they say most of the rooms became available. So that tells you that the next full year results will get a good boost out of the Nairobi Serena, which has been a drag. My view is it's a really solid franchise. It is very well run. And reading that commentary, they finally seem to be seeing a more sunlit horizon. The full year result, as I said, was assisted by a substantially lower tax charge, however, but now they look as if they can properly ride the tourism tailwind now that they've got Nairobi Serena fully turned on. As I said, I remember the Serena from many years ago when I was a little boy in Mombasa. I used to like to play table tennis and swim there. I lost my heart to a girl who used to beat me at table tennis in a bikini, but that's a story for another channel at another time. Africa, let's turn now to the continent. Let's think about what's happening around us. There's so much going on. Things are moving so fast. It's become, you know, you look at one country and you got a revolution. You look at another, you've got something else happening. Let's start with Prime Minister Abiy Ahmed, who was visiting for the Belt and Road Summit, where President Kenyatta was also visiting. He took the opportunity to go and pay a visit to Alibaba Group. This gives him a chance to reflect. He's been in power about a year. It's just incredible what he's achieved in that short space of time. I said in an article I wrote, after 90 days, he reminded me of that incredible footballer at the World Cup, Mbappe. I think he was 19 years old. He came on and he was so fast and he was so dominant. And that's what Abiy has been in the political sphere in Ethiopia. He's changed the game. He sent love letters to Asaya Afwerki, who's probably never received a love letter from anyone in his life. He gets one from Abiy. Abiy has reordered the Horn of Africa. You look at what he's achieved in Ethiopia, which was really very much at the brink, and he was honest about it. He said, we're at the brink, we've got to do something about it. And let me just read what I wrote after those 90 days. I was saying it's all about speed and velocity. There's a philosopher called Paul Virilio who calls it dromology. D-R-O-M-O-L-O-G-Y, which he defines as the science or logic of speed. And I think that's what Abiy is all about. He moves so fast, the rest of the political, his adversaries, they can't keep up with him. He bamboozles them just by the speed with which he makes decisions and the number of places where he's trying to change the dynamics. Virilio notes that the speed at which something happens may change its essential nature, and notes which moves with speed quickly comes to dominate what is slower. Whoever controls the territory possesses it. Possession of territory is not primarily about laws and contracts, but first and foremost a matter of movement and circulation. I think that's the politics of Abiy Ahmed. He's got lots of challenges. You've got a very, very big ethnic problem. A lot of this is not being reported, so it's not visible to us who are outside Ethiopia. And there are some folks who think that his PR machine is brilliant, but there's no follow through. But I don't think that's the case. I really think he had a very, very tall order to sort out the situation. He's doing his best. But it's it's like a ball of fire. It's like being chucked a ball of fire and said, catch that. It's not an easy job. Abiy has moved at lightning speed. The old guard is like the traditional feudal city. If you're moving at speed, you can knock them down real quick, which is what happened. When he came into power after 90 days, and this is something we'll talk about in the second half, he said, we are in debt. We have to pay back, but we can't. And secondarily, We aren't able to finish projects we have started. And with that, he announced his economic pivot. And what is interesting here is, this is, if you want to know what happens, this is Abiy trying to deal with a situation which had happened. And he did. He renegotiated the loan with China for the Addis Djibouti rail route. He's been forgiven some interest-free loans, and he's engaged robustly. He hasn't hid under the table. He's gone and dealt with his creditors, because ultimately creditors are not Santa Claus. They want to be paid back. And the lesson in life is deal with them. You can't run away from them. Now let's turn to, well, if you try and run away from them, it's what happened in Sri Lanka, right? They lost the Hambantota port because they couldn't pay back the loans, and they'd given the port as security, and now the Chinese have the port for 99 years. So Hambantota is a very big lesson for people. Now let's turn to Mozambique, where we've got another weather system about to hit Cabo Delgado, which is the northern part of Mozambique, bordering on Tanzania. This is apocalyptic. It's something out of the Bible or something, right? I mean, it's, and just because it's in an opposition area, one senses the government has not been as active. It's been internationals who've come in to try and help out, but they're going to get hit again. But at the same time, in the area they're getting hit, there is an insurgency going on. There was an interesting article I picked up in the Mail and Guardian about this insurgency, and this is how it starts, this article. The bottom line is that no one knows what is going on in northern Mozambique, and that anyone who has attempted to properly investigate has been threatened or arrested. I've been in this business for 4 decades, and I've never before been unable to answer the why question. This is an insurgency that's happened, and there have been lots of deaths, some brutal beheadings, and people have been talking about an Islamist insurgency. How they got down there, I don't know, but we're going to discover. But no one seems to know the real reason. But I think this is the reason. Hanging over all these theories is the fact that a gold rush is coming. The gas find off Cabo Delgado is scheduled to come online in 2022. It will alter the region's economic prospects. It is the world's largest gas find after the Permian Basin and possibly Brazil, said Standard Bank's Paul Erdley-Taylor. There is so much money at stake that the bank considers it to be the largest ever organic growth opportunity in our history. That's an incredible statement. The largest ever organic growth opportunity in our history. That's Standard Bank. They've been around about 100 years. Capable of precipitating a fundamental shift in the balance of power between Mozambique and South Africa. That's a really interesting statement he's making there, and it is true, and I'll come to tell you why. So in 2012, I wrote an article called Maputo Boomtown. I went there, we visited there, the most wonderful tiger prawns. It's very Portuguese, the atmosphere. We got in a cab, there was a white Portuguese driver. My wife said to me, "What's going on here?" I said, "Look, there are better jobs in Maputo than there are in Portugal." Portugal has made a tremendous recovery since that date, and has recovered and is one of the best performing economies in Europe. And a lot of people are emigrating to Portugal in order to be able to live in Europe, because they've got a very low tax rate. If you want to go there, about 10%, I think, for 10 years, which is pretty remarkable, given that those free tax rates seem to be disappearing in all other parts of the world, don't they? But the point is, returning to Mozambique, in 2014, the IMF had this fabulous conference called Africa Rising. The image you're seeing is from that. I was at that conference, and it was all about how Mozambique was going to boom. The future was Maputo. Cranes were all over the city. That was 2014. 2016, October, they went bust before they'd even taken one bit of gas out of the sea. They basically blew $2 billion of, this wasn't a Eurobond, this is more complex. They issued the bonds under quasi-state entities. They said they were going to use the money for maritime security and tuna fishing. Those boats never left the harbor, and they were never worth the amount that it said on the loan. They were probably worth $100 million, and the government got $2 billion. Where that $2 billion went, the IMF never discovered. Everyone got very upset. And would you believe it? Mozambique went from booming to a complete bust. That was 2016. Now we're seeing it recover a little bit. And you've had this sort of weather system hit it not once but twice in the north. But make no mistake, it is a Qatar, and at some point all that gas is going to be going on stream, and all of you will be thinking, Ali Khan told us to go to Maputo, go to Mozambique, because that really is going to be a bigger economy potentially than all its neighbors. Now, let's go to emerging markets, and I wrote for the headline, Emerging Markets Submerging, because they've come under huge selling pressure in this week. It's been really, really heavy duty stuff. We start off, it reminded me of a song, I don't know if you've ever heard it, called Hotel California by the Eagles. And it describes a party, and you're in this hotel, and then you decide you want to leave, and you can't, and you're going and you're trying to open the door, and you just can never leave, basically. Listen to the lyrics, they're really good if you get a chance. Very old song. But this is what emerging markets have turned into. People have gone in expecting juicy returns, getting paid for the risk they were taking. But now, in certain countries, we're seeing complete collapse. Argentina bonds have completely dumped. Dollar bonds are paying nearly 20%. Now, when you get interest rates that high, it's telling you something very clearly. It's telling you that people don't believe you can repay the money. So you get that happening, and that's why here, of course, you remember there was some tremendous interest rates being paid, and they promptly all went bust. And that's an old boss of mine said to me, Ali Khan, if it's too good to be true, it is too good to be true. And these Argentine bonds collapsed. Argentina peso, the currency, hit a fresh lifetime low. It's already down 18.6% this year. That's a big hit. That's like the shilling going from 100 to 120. I think we'd all be talking about it if that happened, and we'd all be very, very unhappy. Well, that's what's happened in Argentina. Turkey, where President Erdogan thinks he's a monetary policy specialist, but he isn't. That's under pressure. Turkish lira about to hit 6. 10-year yields, that's 10-year money, is at 18%. We've seen this script before because we've encountered it here in Kenya, right? When T-bills went up, we had to defend the currency. That's what's happening in Argentina and in Turkey. The question you have to ask yourself is this going to infect other emerging markets? That's called the contagion effect. One country gets a disease, and that disease spreads all around other countries. That's what people mean by contagion. The question is, are we going to get contagion? Certainly feels like that in a number of different places. The South African rand, African Eurobond yields have gone higher. Basically, the markets are less risk tolerant. They want to be in safe haven assets. Well, it has been a big story about oil. I mean, oil until yesterday had run up 43% year to date. 43%, that's nearly an annualized rate of return of 100%. Think about that. If you'd bought oil at the beginning of the year, you could have sold it by now and retired somewhere on the beach, preferably in Diani, because the beach is so lovely down there. So longest weekly rally since 2015 as the market panicked because Trump said he's not going to give waivers for buyers of Iranian crude. That's China, that's India, that's Turkey, that's a number of countries, and he said they're going to have to buy it from somewhere else. Now, he can say things like that, but the question is, will those countries listen to him? One of the biggest buyers of Iranian oil is actually China. Now, China have always rejected the right of the US to impose sanctions on them with respect to a third-party country like Iran. and a lot of people reject that sanction. But it's a sanction strategy of the US. It's the way to keep people under control. And they're able to do that because no one else is as powerful as they are. But China has always rejected that. So it'll be interesting to see, because the Chinese are trying to come to some kind of agreement with Trump as to whether they'll listen to what he's saying or they'll ignore what he's saying. But the markets, having panicked, started to sell off today, and the oil price is down 3% on the day. But it's had a huge run higher this year, and it's already causing a lot of pain all around the world because, of course, oil is one of the inputs into the entire global economy, notwithstanding this huge move to renewable energy that we've seen, particularly here at KenGen, for example. Oil prices, my view is that we're going to top out here, that we're going to stay around these sorts of levels, but it's put a lot of pressure on the oil consumers, of which we're one. And I told you before, whoever controls the oil spigot controls the world. That's why the key pillar of US power is the petrodollar. That's why you can do many things, but one thing you can't do is go out in public and say you're going to dump the US dollar, the petrodollar, because the US sees that as practically an act of war, because US power in the last 100 years has been built on the control of that oil spigot. Or that oil market is worth $5 trillion in total per year. So it's a huge amount of money. And that's why people like Kapuczynski says oil creates the illusion of a completely changed life, life without work, life for free. Oil is a resource that anesthetizes thought, blurs vision, and corrupts. And he's not wrong. But keep an eye on oil. Important pivot for the global economy, and particularly for us. There are two things that we have to keep a very close eye on in Kenya. Oil price is the first thing, and then the weather, because the weather affects food prices. Uber. Now, I'm bullish about Uber. A lot of people have been knocking me on social media saying, Ali Khan, this company is not solid. I mean, they've got $10 billion of accumulated losses. That's a fact. You know, they came out in a brilliant counterintuitive move and said, we might never make a profit, because they knew the concerns of investors were exactly about that point. What a clever bit of investor relations that was, I thought. So they're aiming for a valuation. That's Uber, the company that I catch my taxi from when I come down to the studio. I think I use them at, you know, they've got 90 million people, they said, who's using Uber once a month. I use them like every day. I must be one of their best customers. But the point is this, 80 billion to 90 billion US dollar valuation. That's pretty chunky. The biggest IPO since Alibaba. That's big. They're going to be selling shares between $44 and $50 each, looking to raise 8 to 10 billion in a listing. Give you a point of comparison, we'll probably raise 2 billion via Eurobond. Uber is 4x or 5x our Eurobond, just to give you a sense of scale. Uber's IPO, the 9th largest on a US exchange and the biggest one since Alibaba raised a record $25 billion in 2014. And Jack Ma, who visited last year, told me that he started Alibaba with $185,000 from family and friends, and today it's worth over 500 billion, closer to 700, I think. So that's why people get excited, because the payoff, if you get it right, is so enormous. And we got a lot of these sort of companies, what I call platform companies, money losing at the moment, but people are looking into the future and saying, you know what, lose some money, but make sure you're gaining customers. And as long as you gain customers in the future, we know you're going to make money off these customers because they'll be relying on you. So that's the strategy of investors are piling into these companies, because you can build a billion people business today because of the smartphone, right? That's the big difference between 20 years ago. If you went to people 20 years ago and said, I'm going to build a business with 1 billion customers, everyone would have laughed at you. Today, with software, smartphone, you can do that. It's quite incredible. And that's what is attracting investors into these businesses. It's the sheer blitz scale of it all. Uber, so keep an eye on that. That will be a big signal Lyft, which is another taxi hailing company, came out and wasn't as successful, and people feel that Uber might feel the pressure of Lyft, but these platform economies are largely a winner-takes-all economy. So you don't want to bet on the losers. They don't get scale. They're not as big as the winners. It's Darwinian, you know, the survival of the fittest, and they eat the little ones. So if you're going to get into this game, you've got to go for a winner, not a second player, not a third player. And Uber is the first player. And I just remind you yourself, you know, if you wanted to see what this new blitzkrieg economy is all about, remember what happened in Nairobi. One day, Uber arrived. 90 days later, practically all those taxi drivers had gone that existed previously. It's a whole new business now. It's dramatically changed the landscape. They tried to fight it, didn't work, did it? So this is the point, that these businesses have the ability to go global in a flash of an eye. And that's why I quote Malcolm Gladwell a lot. You should read him. The guy is a brilliant writer, writes quite small books, but they are very, very deep and powerful. And he talks about a tipping point. He says the tipping point is that magic moment when an idea, a trend, or social behavior crosses a threshold, tips, and spreads like wildfire. That's what Uber did in those 90 days when it came here, and it did that in all other places in the world. And I really think investors will look through the 10 billion losses and say to themselves, there's a huge future here, and I think this IPO will go extremely well, and it's probably worth a buy. Let's move on to international politics. President Trump and Mike Pence are speaking at the NRA next week, and I saw this photograph, and I thought to myself, Mike Pence thinks he's Clint Eastwood. You might be too young to remember Clint Eastwood, but he was like, you know, the good guy, the cowboy, and Pence is kind of striking the same pose. The NRA is a strong constituency of support for President Trump. This is the right to carry arms. This is why they have so many mass shootings, and this is why they do nothing about it. It's because they're beholden to the NRA. Tripoli. This is the description of Tripoli in Libya by the International Committee of the Red Cross as we're speaking. Densely populated residential areas are gradually turning into battlefields. And I went back in my records and I looked at it. Gaddafi fell in 2011. And how did he fall? It was terrible what they did to him in the final, at the end of it, wasn't it? They sodomized him with a bottle. And the point was, that's, you know, that's power, raw power, your ability to do, there's no justice, there was no court to be constituted. But my point is, they toppled him 11 years ago because he was supposedly anti-democratic, because the freedom lovers wanted to topple him. And today we're in 2019, and it is a disaster, or better still, as they described it, residential areas are gradually turning into battlefields. I like this photo. This is of Kim, who's the third Kim to rule North Korea and who's negotiating with Donald Trump, but he's gone to see Vladimir Putin. And I like this photograph because it looks as if it's come from a James Bond film, with two villains meeting to discuss conquering the world together. But no, he's extremely bright, as is his interlocutor, Vladimir Putin. It's just incredible when you think how the Kims have managed to do one thing that Saddam could not do, that Gaddafi could not do, develop a nuclear weapon, and ultimately that is his deterrent against regime change. If Gaddafi or Saddam, although they were accused of it, had really had a nuclear weapon, no one would have bothered trying to topple them, I don't think. And that's what he's got to hold on to. And for all the promises that the US makes, at the end of the day, I don't think they can guarantee his security or his country's security. And he must fear what happened to the others if he capitulates. So my question is, what security guarantees can Trump provide to Kim? That seems to me to be the equivalent of threading the needle. And then I saw that President Putin said, after holding his first face-to-face talks with DPRK's Kim Jong-un on Thursday, that US security guarantees would probably not be enough to persuade Pyongyang to shut its nuclear program. Now, let me take a break at this point in time, but leave you with one final quote. This is from Gravity's Rainbow. It's a book about nuclear weaponry and a rocket that was being built. It's a fabulous book. And in that, he's talking about a parabola. And I'm going to explain to you what a parabola is in the markets, but let me read what he's written. It is a curve each of them feels unmistakably. It is the parabola. They must have guessed once or twice, guessed and refused to believe that everything always collectively had been moving toward that purified shape latent in the sky, that shape of no surprise, no second chance, no return. That's describing the arc of a rocket, but it's also describing the arc of a bull market. If you want to buy something that becomes a parabola, right? You buy it at 5, next thing you know, it's at 500. That's why I like that quote. This is The Smart Investor. This is Metropole TV. I'm your host, Ali Khan Sachu. We're going to talk about the visit of President Kenyatta to China, the loan agreement that apparently has been signed, the avocado trade that they've entered into, and much, much more in the second half. Do join us. Metropole TV, the first 24-hour business news channel here in Nairobi. Welcome back to Metropole TV, The Smart Investor. My name is Ali Khan Sacha. I'm your host. In the second half, we've got Ondiro Ganga here with us. Thank you, Ondiro, for coming through.
Thank you for having me.
It's a pleasure.
Thank you very much.
Let's start with what happened. What was the outcome of this visit of President Kenyatta to Beijing, to Xi Jinping? The broad story is all about Belt and Road. But what were the outputs?
So there are a couple of things that we could take away from that trip. The first one being the very big win for the avocado farmers and market in the country, because now the deal that they signed makes Kenya the very first African country to be exporting avocados to the Asian giant. And that's a market of 1.4 billion people, which means that over 40% of the avocados produced in Kenya will have access to market in China. So that's a really good deal.
What took so long? I mean, why did this take so? Why haven't we been exporting avocados before now, in your opinion?
So there have been sanctions on Kenyan avocados because of safety and health reasons, because of pesticides that we are using when we are planting avocados. So that was a major hurdle that needed to be crossed, and it's taken over 7 years to clear that hurdle with South Africa, to clear that hurdle with Uganda, and now we've cleared it with China.
So now this is an exciting prospect for our avocado farmers, right?
Yes, it is an exciting prospect because as of now, the avocado market is worth over 5 billion Kenya shillings.
$50 million. Wow. Okay.
So that means that if you open up the Chinese market, that's just more market for Kenyan avocado and more money is streaming back to the avocado farmers in the country.
And I must say, our avocados are far tastier than anybody else's. I must say, I've tried many different ones. So that okay, so that's a big win. And the avocado story has been pretty interesting, right? Suddenly took off, and everyone put avocado on toast. Suddenly, it became the millennial diet. So maybe with the Chinese as well.
Yeah.
But everyone was interested in this other issue where President Kenyatta had taken his handshake partner, Raila Odinga, with him, asking the Chinese for more debt. Tell us what happened there.
So we all know that the second phase of the SGR has begun and it's yet to be completed. And there's need for more money. And I think that's one of the reasons why the president made that trip too, to try and see if he could secure a loan that he could use, or that rather the government could use to finance the second phase of the SGR. And taking along Raila Odinga was it's a two-faced coin, you know. Some think it's a political move, and some have argued that because he is he's looked at as a Pan-African icon, and at the AU he has a role in relation to infrastructure. So that's why the president took him.
That's an interesting point.
Yeah.
But you know what? I go back to FOCAC last year, which is I think it's annual or once every 2 years, where everybody goes to China and meets the Chinese president. And he really changed his tune there. I think he suddenly became worried about political risk, i.e. you do a loan with the government of today, 5 years down the road, the next government says, hang on a second, we repudiate these loans. So I think in part he's been requesting a greater show of commitment before these big loans. So I found that quite, so now what's the amount that they're lending us?
Actually, I wouldn't place an exact figure to it, because these are always conversations that are always going on, and you never know. We can only put a total figure once the project is complete. Because you remember when the SGR began, we had estimated it would be around 400 billion shillings, but it has surpassed that. So we can only say this is the amount China has given us for this phase of the project once we are sure the project is complete, and these are the receipts we could show. But as of now, the money they've given us, we invest and then we see. Does it complete the project? Then we can say that's the number.
But you know, there's tremendous concern that we're kind of maxed out now on borrowing. I mean, you know, we've had guests on my show who've spoken about $2 billion of pending payments by the government. In classic economics, these are stress indicators. This is a light blinking amber if you're not able to pay those sorts of things. Now, do you think that people are convinced that this was the right move to pull off at this time?
I think many people are not convinced, because if you look at our debt levels, the numbers have risen to over 5 trillion Kenya shillings. That means roughly every Kenyan has a debt of over 110,000 Kenya shillings. And
every 100 shillings of tax we're paying, 50 shillings is going in a debt.
Look at that. So it just means that the ratio of the GDP to national debt, as much as the deputy president has always insisted that we are on the safer side, we are almost reaching a tipping point. You understand? And also, servicing that debt is proving to be a burden, because the government is not making any money. Every time they read the budget, we have to borrow more to sustain our budget, you know. And if there's something that needs to be done, the president has said it and we're not seeing it being implemented, is recurrent expenditure. Recurrent expenditure takes a huge chunk of the national budget. So if we are to tame our debt level and try to find better ways of servicing it, we have to cut on recurrent expenditure. And I was speaking to an expert some days ago who said we need to introduce like sectoral reforms, where we say we'll have budget cuts in A, B, C type of industries or cabinet secretaries, so that, you know, let's say education has a 10% cut, health has 5%, infrastructure has 8%, and these cuts are going to the unnecessary areas, not buying doctor equipment, but rather the spending that you spend on foreign trips and per diem, so that we just save more money.
Now, you know, it is one of the most difficult things to cut the recurrent expenditure of any government, because it's heavily political, right? You know, that's why you find governments don't make those decisions before time. They make it when it's forced upon them quite often. Do you think we're anywhere near that point? Or the people you're speaking to, do they feel that we're near that point?
I think the president has always shown goodwill. He's always shown goodwill, and he's getting to a point of frustration because he's getting to a point where he can't borrow no more. You know, he can because he's the president, but it's not looking good on him and it's not looking good on the economy. And this is his final stretch. So he's more concerned about legacy. And if you look at the numbers in relation to debt, during Moi's era, it was a little bit high. Then Kibaki came and kind of stabilized the whole thing. But with the Uhuru Ruto regime, it's going higher and higher. And if we do not see the result from the debt, then he'll go down as the president who borrowed a lot, and Kenyans did not see the impact of the money he borrowed. So right now, I think he needs to go beyond the goodwill. He's shown the goodwill, but he needs to put his foot down. He's the president. He could give an executive order and the next day it would be implemented.
So you think really it's a call to action? People expect him. That's why there was so much disappointment, I think, at the State of the Union speech, when people kind of expected him to make some announcements, but we didn't get any. I
think he's ruled enough with a velvet glove, and it's time to pull out the iron fist. He doesn't have a lot of time left. If cabinet secretaries are not performing, they're not your friends. You don't have to vie in 2022 again. Kick them out of office and bring performers who will ensure not only do you leave office with a good legacy, but Kenyans remember you as the president who changed their life. Because the U.S. ambassador to Kenya was speaking at a conference, and he said...
You attended that, right?
Yes. The first thing he said is the cost of the Big Four agenda is equivalent to the cost of corruption in Kenya.
He said that?
Yeah, so Kenyans have to choose. And in relation to China, we respect that we have a good relationship with China. But he brought up a very interesting point. He said, the relationship with US and other countries is bound on respect. We'll give you money for development. We are not trying to trap you with debt.
So he's playing on this Hambantota port in Sri Lanka, where the Sri Lankans borrowed an enormous amount of money for this port, which was a complete white elephant. They couldn't pay the loans, and the Chinese took the port for 99 years. And that was a story that played around, but then went quiet, that we'd also cross-collateralized our railway with the port. It's not clear whether we did or we didn't, but it's just worth making. Now, let me ask you another point. It's become very adversarial, this America, China, and we kind of in the middle, right? So you got the Americans, like the ambassador, saying, we're here, we're the good guys, those guys are trying to trap you, and there's a whole propaganda war going on. You've got, you know, a Chinese TV channel, CGTN, you've got CNN on the other side. Do you think we are playing the two well? Because I would have thought from our point of view, the best thing to do is have both people at the table and taking the best from both. Do you think we're doing that? Are we able to be a balancer, or do you think ultimately we'll have to make a choice?
I think at the end of the day, ultimately we'll have to make a choice. Because as much as we would want to politicize what Ambassador Kyle said, there's some truth to it. If you look at Kenya's debt level, we owe the Chinese government more than we owe institutions like the World Bank and the UN put together. So that's a very dangerous road we are taking on. And you remember there was a time that there was word that the Lamu port was going to be overtaken by Exim Bank. And Kenyans are very angry about that. And you know, Kenyans can really lash out. And that's when the government came out and defended itself. But you never know, where there's smoke, there might be fire. So a time will come where we'll have to make, just like your show is called The Smart Investor. We must become the smart investors. If we are taking debt, we must be very smart about that debt. Or if we are taking American money, then we must be very smart about the kind of relationship we want to have with America. Because Ambassador Kyle said they're doing a lot of things, but they just can't put it on the billboards like the Chinese do. So we need to be told, what is it that the Americans are bringing on board? Of what value are they in the long run, and compare with the Chinese? And if we can't have two, then let's pick the deal that suits best the interest of this country.
Because the Americans have also got a number of deals that they want to do. The Bechtel Road, Mombasa-Nairobi, which I'm from Mombasa, I've driven up that road so many times, and they want to put in like a super highway. And there are a couple of other deals that they've been trying to pull. So it'll be interesting to see. But it feels like we're kind of caught in the middle a little bit today in this great power competition between the US and China.
Yeah, I mean, everyone is trying to flex their muscle. Everyone
Yes.
is trying to prove that they are the world superpower and the world biggest economy. But at the end of the day, also, I think it also narrows down to values, because we know how the Chinese and the Kenyan government have been doing business. There's a certain level of accountability that the US government will try to hold the Kenyan government to. And because of our fiscal indiscipline and corruption cases, that makes it very difficult for us to do business with them. So it trickles down
That's
to
an
so many
interesting
things.
point you're making,
Yeah.
right? And people will deny that and say, no, that's not what's happening. But clearly it is, because of the level of inflation in some of these deals that we've done, right? I mean, I think our railway per kilometer has cost us $10 million. I mean, you go and compare that with other railways in other parts, and people will tell me that, oh, Ali Khan, it's a different railway, and the technical side of it was much more complicated. I don't know, but it just when you look at the ticket, it was much more expensive per kilometer than any other one I can think of.
Rwanda is doing the same. In fact, a better project than we did. There's Saka Kigali Railway, and they're doing it at a cheaper cost. It's electrified. We were promised electric. We got diesel. Everything about the Rwandan train is so right. It's what the SGR was supposed to be. Just that is coming at a lower price. You know. And the source of funding is also very interesting, because the Rwandan government will chip in funding, and they'll use domestic funding and just a little bit from the Tanzanian side, Turkish.
Yes,
Turkish
I saw that.
Yes.
Yeah. So I mean, do you think, you know, when I look at Kenya, we were a geopolitical lynch state, right? We're the gateway for 11 countries. But has our advantage been eroding over time? When you look at the decisions to go to Tanga by Total, I mean, you know, we didn't say anything about that, but it's practically criminal that we lost that. You know, what was the reason? Again, probably brokerage, as you were describing.
Yeah.
But do you think we're still in a good position or not?
Kenya will always be an ideal hub for investment. Every investor is looking forward to investing in Africa. And what's the one place that you come? Kenya, because of the vibrancy and the nature of our economy. Very volatile, high risk, but high return. You know, there's always instability during political periods, but the economy always finds a way of recovering. You understand? But we can't keep playing that card, because our younger brothers are catching up with us. Ethiopia is catching up with us. Rwanda is catching up with us. Tanzania is catching up with us. What are we doing? They are working, but what are we doing? We just can't be the big brother forever. It takes a lot to be the big brother. If you do not continue to flex your muscles, they will not grow. Streamline government services, you understand? Take away bureaucracies. You go to Ethiopia, the very day you land, you can get your work permits and put up your industry or your company and start running a business. Can you do the same here back at home? You understand? During the event that I was at the launch of the Mars Wrigley plant.
Yeah, oh, you went there.
Yes. Machakos County governor said that there's a lot of bureaucracy. For example, you want to give investors incentives, for example, land.
Yes.
So that they can have land, invest for free.
Yes.
But they will be providing your people with jobs, and they're paying taxes.
Yes.
But there are certain forces that are pulling and pushing in different directions. And you find that case goes to court, it stretches out for 5 years. No investor wants to hold their money for 5 years. In those 5 years, what they're thinking is, this money would have made more money for me. They'll go to the next ideal destination. You know, Kenya has been ditched so many times for Ethiopia, for Rwanda, for Tanga, like you said. And if we do not fix it, they're going to keep moving. For example, Rotich and said we should look at our interest-capping bill. Peter Munya said we should look at the cost of electricity. But if they don't put the work on the ground and reduce the cost of production in the country, investors are not going to come to Kenya. They'll go to Ethiopia, where the cost of labor is so cheap, electricity is cheap, government services are easily accessible, and you make your money at the end of the day.
And at the end of the day, money is smart. It's not going to make silly decisions. It's going to make the best. Pleasure speaking to you today on Dear Oganga. It was a real pleasure having you on the show. And we look forward to having you back again when we've got these big geopolitical set-piece events for you to interpret for us.
Thank you very much.
Thank you. This was Metropole TV. This was The Smart Investor. My name is Ali Khan Satya. I was your host. We got a break for a couple of days. Lucky you. And we'll be back on Monday from 8 p.m. like we are every weekday. And I'd like to give a special thank you to my guest, Ondira. Thank you. Wishing you all a wonderful weekend if you haven't begun it already.